Okay, the last couple of weeks we have discussed corporations, C corporations and S corporations, and last time we discussed limited liability companies. So today what we want to discuss is sole proprietorships. Sole proprietorships means that the business is owned by one person, sole, S-O-L-E, and that's really important. A sole proprietorship is a single owner business, no formal structure, and many people go out and just form a business and call themselves by a particular name. That legally is a sole proprietorship. Sole proprietorships can use your individual name, or they can use what the state calls, in every state, an assumed name or fictitious name, because in fact it's not your name. But if you are a sole proprietorship, it's your business, only your business. You don't have to worry about anything of somebody else telling you what to do, somebody else making it difficult for you, somebody else having to sign on contracts, somebody else having to sign on anything else. Sole proprietorships are owned by the single owner of the business themselves, person or entity. Now, why would a person use a sole proprietorship? They're easy to manage, easy to work. You can set up the bank account in your name and in your social security number if you want to. The question with all of this is, what's the risk? The risk is that the sole proprietor, the owner, risks everything. If somebody were to sue that business, the sole proprietor would be responsible for everything. From a tax point of view, from an accounting point of view, sole proprietorships can basically keep their books as any other business. Not as complex as far as the different categories, but you've still got revenues coming in, and in some cases you may have a cost of sales, and then you have your costs, your expenses that reduce the revenues, and you have profits. The problem is, from a tax point of view, if you are only a sole proprietorship, you may not be able to prove to the IRS that you are in business to make a profit. To be a legitimate business, your business must have a profit incentive, a profit motive, and the owner must do everything they can to make a profit. It can't be continually a loss. If you can show that, then the IRS considers you a legitimate business. For that reason, we suggest that you don't have a business in your own personal name. You have a business that has an assumed name. So you have a business that goes by your name. Mine is Ron Microfish. That's it. You can't call it an LLC. You can't call it a corporation if you are a sole proprietor. If you do that, you're fraudulently telling the public that you work with that you are a limited liability company or a corporation. On the other hand, the same is true if you have a business name that is in fact an organized LLC. On all your signage, on your letterhead, on your business cards, if you don't put Microfish LLC or Microfish Incorporated, the people that deal with you can assume that you are in fact a sole proprietor. Therefore, they think that they're doing business with a non-formally organized business, which could lead them to make decisions that may not be correct decisions to be made. If you're in business as a formally organized company, you have to show incorporated or LLC. But as a sole proprietor, you don't have to do that. You can just put the name of the business out there. Additionally, if you're going to be a sole proprietor, you don't want to use your own social security number. The individuals that do that run a risk of having everything that they own attached and can be sought after individually. Plus the fact the IRS considers you a hobby business. We don't want you to be a hobby business. The IRS considers a hobby business as one who has no profit motive, no incentive to make a profit. Those types of individuals are people that do multi-level marketing, for instance, and I'm always counseling owners of companies that do multi-level marketing or individuals that do that, the IRS considers you a hobby business. If you're a hobby business, they're going to disallow most of your taxes, your tax exemptions, your expenses. Let me give you an example. In 2016, I had a CPA bring a client to me and said, Ron, can you help this person out? And as I looked at his tax returns, one of the things I noticed is that he had no formal business organization, no structure. But during the year 2015, he and his wife had traveled across the United States in different locations, researching the type of business that they wanted to get into. Bought meals, paid for gas, had all sorts of different expenses. The next year in 2016, they did their own taxes. That's one of the biggest mistakes in my opinion. But they prepared their own taxes, and in preparing their own taxes, they put down $25,000 of expenses in researching out the type of business. The IRS kicked the whole thing back, said, you owe us $8,000. Why? They could not prove that they were in business to make a profit. They couldn't prove that they were an exactly profitable business. All they could do is prove that they were a hobby business. There was no formal structure. The minimum structure you need to have in order to be able to consider a real business is a DBA, a sole proprietor using not your name and not your social security number, but a fictitious name or assumed name, and then have applied to the IRS for an employer identification number, EIN, and that business needs to have its own bank account. There's no particular paperwork you have to do. There's no meetings that you have to keep. It's simple to run. It's easy to manage. But if you're not organized properly, you get very few tax advantages, and you could be sued and have everything taken that you want, that you own personally. When you file your taxes as a sole proprietor, you file your taxes on a Schedule C on your personal tax returns. The IRS likes it if you have a different name than your own and a different tax ID number rather than your social security number. And they like it if you have a different bank account. They don't like you commingling funds. You're not a real business if you commingle funds. In other words, put your money in with the business money. If you have a W-2 salary coming in, you don't want to combine the two of them. However, you can open up a bank account in the name of the sole proprietorship and only use that as your personal bank account if you don't have outside extraneous money coming in to that bank account. If you live off the money in that bank account, you can use that money for wherever you want to, because whatever you use for yourself is considered an owner's draw, money that you would be declaring on your income tax return as earned income. But you can deduct business expenses off of there. Printing, travel, you keep mileage log on your car and use that for your business and keep track of that. Car repairs, gasoline, other expenses, web page, for instance. You can do all of those things that any other business does. There are some things you can't do. For instance, you can't rent assets to yourself. There's a lot of things you cannot do as a sole proprietor, thus you don't get to take advantage of many of the tax business things that you're going to be able to write off if you have a more formally organized business. One of the other things you need to know from a tax point of view is that the same as an LLC or a sub-S corporation or a partnership, a sole proprietorship is a pass-through. A pass-through means that you can pass the profits or losses to you individually, and those profits become your income, or those losses become a reduction of your income. But any money that you earn off of a sole proprietor is considered self-employment, so you have a self-employment tax, since you don't pay yourself a W-2 wage. I'm going to revert back just for a moment, though, to limited liability companies. Many people claim that they are a single member or one owner limited liability company. We've talked about this just a little bit. By doing so, the IRS considers that a disregarded entity. You may call yourself an LLC, but you truly are not treated as an LLC. A single member LLC prepares the taxes as though it were a sole proprietorship. Now, who can own sole proprietorships? Like I said, individuals can. But also, limited liability companies can have sole proprietorships. Corporations can have sole proprietorships. In fact, on many occasions, we recommend that you have several different types of businesses that you want to do. Why not form a C corporation and have the corporation own different businesses, a DBA? The drawback for that is that if somebody sues one of the DBAs, all the rest of them are at risk. If somebody sues the corporation, everything's at risk because the corporation owns the DBAs. The advantage is that the DBAs, the businesses, don't have to have their own tax ID number. They can have the money and the income flow right to the corporation itself using the corporation's tax ID number and the corporation's bank account. But you can have all sorts of different productions out there, things that you do that are viewed by the public in a different way, and the public doesn't need to know that they're connected because it's a sole proprietorship. Therefore, there's no disclosure that the corporation owns the sole proprietorship. So what we try to do is to suggest to you that a sole proprietorship is used in special instances and can be used in special instances. You don't want to necessarily use that as your only business because you miss out on several tax deductions and you have a high risk of losing a lot of your assets and all of your assets. But you can also use that DBA in your businesses if you want to expand the business to open other things, but use it judiciously. Know where you're going. Make sure that you get good professional advice so that you know what your next step is. If you want to truly not make any money from any of your business investments, form a DBA, a sole proprietorship that you own in your separate name, a fictitious name with its tax ID number, then have that business sign a contract with other businesses that you may be involved with, and they pay that sole proprietorship as the general manager or for marketing or for other services. That way you can earn money, and that's the only money you have to show and declare because you don't earn any money from anywhere else. So our recommendation is that a DBA, a sole proprietorship, is good to be used if you use it correctly. And it can be used. It can be used for a good place, and it can be used to protect you in all sorts of different types of instances. But use it judiciously. Make sure that you sign the documents correctly, that you have contracts in place, and that you know what you're doing. Get professional advice in the use of a DBA. But don't hesitate to use it if you think it can be used for your best good.